Our panelists are here to weigh in. Thomas Savage joins us, research fellow at the American Institute for Economic Research. And Brandon Arnold's here, executive vice president at the National Taxpayers Union. Guys, welcome. Thanks for coming on. All right, Thomas, start us off. What did you make of the trip and what the president had to say about how the meeting went?
Well, this is hopefully a sign of good things, but we're definitely not out of the woods yet until we get that formalized trade deal. I think we're still going to see some uncertainty in the market so long as we don't have a formal deal yet. So having something really solid there is really going to help people plan around whatever's coming next.
Absolutely. As we take a live look here at the White House at any moment here, President Trump this morning, he's heading back to Palm Beach, Florida, after a very extensive trip in Asia, visiting several different countries, Malaysia, South Korea, Japan, obviously meeting with all those leaders in that area, specifically President Xi. As we await the arrival or departure, rather, of the president here, I'll go to you, Brandon, on that, and maybe just something that your takeaway would be from President Xi meeting with President Trump. There's been some criticism. There's been some support of what the president was able to get done. What was the highlight for you?
Yeah, I mean, the highlight is certainly to begin those de-escalation talks. We do need to reach an agreement with China. They're a major trading partner.
Yeah.
And simply turning off that spigot is bad economic news for the United States and in China as well. But getting China to agree to things, while that's really important, is a big win. Getting them to follow through on their agreements is a whole nother story. Back in 2020, we reached a deal where they were going to increase purchases of American goods by $200 billion. And they simply didn't do so. So the next phase in this process, as Thomas said, is to lock in these agreements, and then beyond that, to make sure we have the enforcement mechanisms to make sure that China actually abides by them.
All right, so the Asia summit trip was big news this week. Also, we learned about the interest rate policy change. Here's Jerome Powell. Let's watch.
In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Thomas, but now several days out from the announcement, what kind of impact has this made?
Well, some of the market is still kind of waiting at bated breath to see what the Fed is going to do. There was some disappointment about no rate cuts in December, but they are happy about this. And again, it kind of speaks to a much larger problem where so much of the American economy, especially in finance, is hanging on every word that the Fed is saying, whether it's Chair Powell or somebody else at the FOMC. They're hanging on every word that the Fed is saying and trying to adjust their business based on what the Fed is doing instead of meeting the needs of the Americans or the global economy at large. And so if the Fed focused more on a rules-based approach, that could create greater predictability. And at the end of the day, that means greater stability for the dollar in your pocket.
Yeah, good point. Just checking on the markets now. NASDAQ seeing a big spike right now, just above 300 points here in the green. Watching that. Also watching the government shutdown. This is huge. The Congressional Budget Office reporting that the U.S. economy will lose between $7 billion and $14 billion due to the federal government shutdown. The shutdown has entered day 31. That's today, with federal workers missing paychecks. And then tomorrow would be the interruption of food benefits for low-income Americans, SNAP benefits. Gross domestic product expected to be lower 1 to 2 percentage points in the fourth quarter of 2025. That obviously will not be good. The administration's up in a roar about this one, wanting to invoke the nuclear option, if you will, though that would be up to the Senate. That doesn't really look likely, but I'll go to Brandon on this one. In terms of the SNAP benefits and also the Affordable Care Act, remember, I believe open enrollment, starts November 1st as well. They're in for some sticker shock. Talk about how this affects everyday Americans day after day as this goes on and the government remains shut down.
Yeah, I mean, I think we typically think of a government shutdown. We think of D.C., we think of federal employees in the nation's capital, but obviously the implications are much, much broader. We have federal installations all over the country, military all over the world that are beginning to see disruptions in pay. So many of these programs, whether it's SNAP, providing benefits to low-income Americans are going to be cut off or significantly cut back. People that are enrolling in programs like health insurance, as you mentioned, might not be able to get access to the questions that they have as they're trying to sign up for new plans and change their coverage. This is an enormous disruption to the way of life for so many Americans, and it's just silly at this point. It's just silly that the Democrats in the Senate right now are not reopening the government. It is a slam dunk, politically speaking, and a slam dunk for so many Americans that are relying upon federal government services and aren't going to have access to them.
Yeah, I know. I keep waiting for Democrats to come forward with some sort of alternate solution or some sort of plan in which, their vote would make a difference. But we haven't seen that, quite frankly. Republicans just need a few more to join in to reopen the government. Gentlemen, we have to leave it there. Thank you for joining us. Thomas Savage, Brandon Arnold, appreciate your time.
Thank you.
Thanks so much.
Thank you.
All right.